For here, the rate update. Thank you so much for joining us today. I have a special guest out here, and he's a realtor in Southern California. And what I did is I reached out to him. He's a huge YouTuber, getting a lot of traction. And I'm trying to get answers to questions. And him and I had several conversations, and it's great. It's a great conversation because the selling side of the equation, I'm on the financing side. And the first thing you guys are going to say, oh, you guys are FOMO in real estate because that's what your livelihood consists of. And my answer to that will be, yes, you're right. But Scott has this is entrenched in my brain at this point. We had a conversation last week, and I'll let him say it. But, you necessarily don't have to have or buy a property that you live in, but real estate is a huge wealth builder and wealth creator. So welcome, Scott. And he usually isn't this serious behind the scenes. No, I'm just kidding. So welcome, Scott. Just if you would, just introduce yourself, who you are. Please plug your YouTube channel. That's how I found you, and that's why I started following you, because of your content and everything else that you do.
Well, thank you so much, Dan, for the great introduction, and I appreciate that. My name is Scott Walters, Scott Walters Realtor USA on YouTube, and I am a real estate investor. I'm a licensed agent. I work for a big brokerage. I'm a longtime salesman. I've had to take some serious lumps in the real estate industry, but that is in fact my lane, and I try to stay in my lane. If you want to ask me about cryptos, wrong guy. If you want to ask me about stocks, wrong guy. But if you have anything you want to know about real estate, I'm your guy. And like you said, I have a lot of cliches that I've adopted, new mindsets moving forward for myself personally, and I usually try to broadcast that on my channel and to my clients. And 95% of all millionaires made their money in real estate, but it wasn't by buying their home. It was by buying other people's homes. So I'm a big advocate of, it's not as important to own where you live. It's just important to own. You don't get hurt in real estate when you buy at the wrong time. You get hurt in real estate when you sell at the wrong time. So this is a very complex situation that we're going through now, because we like it or not, we're in a real estate bubble. Most of us are now pretty much painfully aware of that, but that's fine. We're not going to ignore the elephant in the room and tell you it's all rainbows and sunshine if there's some potential things that we need to heat map and temperature check in the current real estate market. And that is my job, and that is my commitment to you and my viewers.
The reason why I watch Scott, and I reached out to him, he has a lot of, and I'll be transparent, and we had this conversation, he tells it as it is. Is there a bubble? And he explains to it. So when I first started watching your channel, what intrigued me was the truth that you were giving, the not so good news about a lot of things. But then I'm like, well, you're a realtor. So if you're FOMO in real estate, why would you be talking about, a bubble and the financial issues and mortgage rates going up and everything else? So that's why I reached out to you, because you have both sides. You're a realtor, but then you're telling also the realities of things. So the one biggest thing that stood out to me was what you said. And we had a lengthy conversation last week, and Scott made a point saying, I'm not saying that you have to buy a home to live in, okay? But you should at least contemplate owning some real estate. What I try to do also on the channel is to reach out to realtors all over the country, because just because there's a bubble in one area doesn't mean there's a bubble all over the country, okay? So, but my biggest question that I always try to ask is, do you rent, do you buy, or do you hold? And my biggest question is in regards to housing. Where should you be living? So Scott, you have a client go to you and in your section of the country, and they're like, hey, I want to buy a house, but this is the question I'm sure you get every day as well. Why would I buy now when rates are skyrocketing and there's a bubble in mortgage or housing values are going to crash? So I just want your take on that piece of the puzzle.
Well, that's a common question.
Like you said, it's a complex question.
Well, and it's very common right now, and it's the $1 million question. And, the reality is I'm happy to let people get on the sidelines if that's what they want to do. I'm here to help you. I'm here to earn your business later. And I'm a rare breed when it comes to real estate agent. Listen, I don't need the commissions anymore. I've already achieved my goals in real estate. I'm good. If everything stops now, I've done it. I do now what I do because I love doing it. If you love what you do, you never work a day in your life. So the reality is that, it's really hard to time the bottom of a real estate bubble. So if you're thinking, I'm going to wait for the crash, I'm going to buy the dip, I'm not necessarily sure you'll ever time it perfectly. But one thing we can do is time the top. And we're probably in that right now. Why, you ask? I'm about to tell you. Because anytime you see a manufactured bubble through government stimulus skyrocket in appreciation to all-time highs in the shortest amount of time, you're probably at the top. We're seeing it now in that chokehold. We can't tolerate any more growth. Maybe a tick or two, like you said, real estate is local. So some areas experience crazy appreciation. Some areas responded like they would in a normal market. Every market is, in fact, different. So it's hard to paint this with a wide, brush stroke in terms of trying to say, everything, if there's a correction, every area is going to correct. Some areas are just more susceptible to others. So everybody's needs will be very, very different. I'm happy, like I said, there's one thing we can all agree on right now for a lot of areas anyway, is you've ever been considering selling, now is probably one of the best times you could, in fact, sell. We can all agree with that. But now with a lot of my clients, they're like, Scott, I could sell right now for a ton of money, but the place I want to buy, I'm just going to go buy in the top again. So we're kind of got an industry in a little bit of a landlock, a little bit of a chokehold. And so, that's really the dynamic that we're in. So I personally am a big fan of, it's not as important to own where you live, it's just important to own. So let's say you were in the market right now, like, hey, listen, I want to buy. My advice would be come in heavy, carry a little debt, even at 5 or 6%. But if you come in with minimum amounts down and you got your neck really far out, or one hiccup in the economy, or your income can now throw you into a tailspin, I don't like that. I don't like that for my clients. I want you to come in with skin in the game. Typically, what I like to do is see how this property would pencil out. Let's say I'm looking at a house and I want to basically turn it into a rental property. Well, I got to see what's its rent range. How much do I have to come in? And Dan would be a great guy to ask that. How much do I need to come in with to put my payment in or under its rent range so I can have it cash flowing every single month? Those are the questions I want my people asking me.
Gotcha. I'm also a proponent. I'll ask you the question is, I was talking to a realtor last night in the Carolinas. I was actually on his show, and he sold a property in 2019. He's kicking himself in the head now. He said, and the person he saw it just got listed again. Now, he sold this house in 2019. It's already doubled in value.
Right.
So, is there a bubble? Is there not a bubble? It's like, I always say that this way. It's like time in the stock market. You're never going to do it. You're never going to buy at the ultimate low and sell at the ultimate high. But the biggest question I always try to answer is, so what do you do for housing? So you stood out when I asked you this question perfectly. And you had the answer that I have. It's up to you guys. Like Scott was just saying, we're not pumping or FOMOing real estate. We want to just make sure that you're educated on the information that there is. So here's my analogy on some of this stuff. If you're not going to be in the house for 3 to 5 years, don't buy. Because, if the market does drop, and I don't expect a major correction, that's my side of the fence, because supply demand. That was another reason why I reached out to Scott. I like talking to realtors all over the country to figure out where they are, what's going on. Are more homes coming on the market now than you've been seeing? Are houses being relisted for some specific reason? What's the day on the markets? Where are prices going? I just posted a video yesterday. Here's the complex piece of this equation is I just posted a video yesterday, and you probably know this detail, is rents was just posted yesterday by Zillow, and rents from February of 2021 to February of this year are up 16.8%. A huge spike. Okay, at the same time where house values basically skyrocketed. Do you have an idea or why not only home values completely skyrocketed, why did rents also on that side of the equation, which usually is steady at about a 3 to 4-ish range of increase, that price going up 3 to 4% a year, went up in some cases 18 to 20%. Do you have a thought behind why not only home values spiked, but rents also went out the roof?
Oh, absolutely. I have my temperature check on that one. And like I always say on my channel, lockdowns. Welcome to what happens when you lock a nation down. We put the supply, people were landlocked into their houses, and then we saw skyrocketing appreciation. So rents are obviously going to follow, just a lack of supply out there. So, it's just the industry currently is in a chokehold with supply because of lockdowns. Now that we're reopening, we'll probably see inventory start to make its way to market. The challenge is now is the recession, and we're right now in the inflation is the hidden tax.
Yeah.
So just like in the last downturn, it took a while for it to play out. It doesn't just happen overnight. And you mentioned something that kind of always comes to mind for me. This is real estate. This is not the stock market. Real estate is designed to be held, not flipped and traded, and it's not the stock market. So real estate moves much slower, but it all comes back to the pandemic. If it's not for the pandemic, we're not having this conversation today, more than likely. I think we could all agree with that. So rents are just following prices, the lack of supply, the demand for housing, the money grab, you name it. As a full service real estate professional, I handle my own rental properties and then some for my clients. And typically, a lot of times what I personally do, because I'm more of a private investor than a big property management company managing, a gazillion rental units, is when I have tenant turnover, I'll see what the competition is, and I will go ahead and put the property back on the market at its current rent range. I always come in a little under. That way I get a big influx of people interested in the property, and I can handpick quality tenants. The key to being an investor in real estate is quality tenants, long-term tenants. No tenant turnover is horrible, because a missing month's rent, that's not good, especially if you just try to get the most amount of money for your rental as possible, and then somebody sees a better deal, they leave. So you're better keeping them a little under market value, keep them put. But it comes back down to the pandemic, Dan, supply and demand. We've got a lot of upward pressure on housing, whether it's the rental or buying market. That's just what we're in. Markets always cycle. Markets always change. You can get rich in real estate. It's probably not going to be buying your home. And even if you saw those appreciation rates, it's just dead equity unless you do a cash out refi and start using the house as an ATM. Bad move in my experience. But hey, what do I know? I'm just a guy trying to figure this out with the rest of us.
Yeah. And you hit it dead nuts on. We don't know what tomorrow's going to bring. If we did, we wouldn't be on this channel. We'd have all our money down on red or black, and we'd hit, we'd be multi-gazillionaires at this point. So that's, one of the reasons why I asked Scott to be on here is I got along with him very well on our conversation. It's like I'm talking to kind of a mirror when I talk to him, because we hold a lot of the same values and the same opinions with things. But I always try to also reach out to people that I have completely different opinions with. It's not to argue. It's just basically have a nice cordial debate saying, hey, I didn't realize this. I don't know everything. Scott doesn't know everything. So if I can pick his brain, him pick mine, we might discover a lot of things. And as we're doing that, you guys are getting educated while you're watching this thing. I got a question for you. I'm not trying to put you on the spot on any of this stuff. And so when you hold rentals, back in the last 2 years, when there was the moratorium put on, were a lot of the investors, were they still getting money from the tenants, or did the government pick up like some of the rent payments? Because, in most cases, there was forbearance out there if you had a Fannie Mae or Freddie Mac loan or whatever, and it was usually on your primary home. I don't think it really flowed over to a lot of rental properties, but it could have, because they didn't really ask many questions when you called in for the forbearance. So during the pandemic, did a lot of investors get really hosed? And that maybe is what caused the spike. They're like, okay, well, I didn't get rents for a year. Now I got to catch up. So I'm going to put up the rents to start getting back all the money that I lost. Because remember, guys, when you have a property, if there's somebody renting that, you're paying rent, you're paying somebody's mortgage. Okay. Somebody owns that house, and the big corporations don't own everything. And everybody says, well, you're an investor, you should not be able to buy a house anymore and have to rent it out, because we should have to first have people being able to buy a primary home before they can buy an investment. I'm completely 110% against that. But again, going back to my question, were a lot of investors really put in a bad position because they could not collect rent because of the rent for moratorium, and that maybe would cause the spike in prices because they're now trying to catch up?
Yeah, well, that was a really interesting dynamic when they did eviction bans. So the reality is, during the health pandemic, they tried to keep everybody in place, restrict movement. So what happened is, if you couldn't pay your rent, you could legally you couldn't be evicted. So what the government did for the investors that had to pay their mortgage, because it wouldn't be fair to let your tenants not pay their rent, but then you get a foreclosure notice for non-payment of a mortgage. So the mortgage forbearance was really almost designed for people like that said, hey, listen, here's how we're going to help you out, Mr. Homeowner or property owner. If you have a non-paying tenant, we'll put your mortgage on forbearance and we will give you the reprieve too. That's what it was designed for. So what ended up being produced, in my opinion, not in every case, but probably in many, was this was a money grab. So I remember I was nervous. Luckily, it comes back to quality tenants. I was lucky. I had high quality tenants, but they at initial lockdowns, when we didn't know what was going on, they hit me up and they said, hey, listen, can I get some free rent? Can I get some help? And I said, well, that's what the government stimulus was for. I can help you out if you need help, but I'm not going to do rent forgiveness. You're going to have to get caught up again. So then it was up to them. They decided, hey, no, I don't need it. I can pay my rent. Great. So then I could have gone to the bank and said, hey, can I get a mortgage forbearance and started to squirrel that money away,
right,
maybe dump it into the crypto or stock market. That's what ended up happening. A lot of people took forbearance that didn't need it. They took it and rolled it into the financial markets. And that's why these markets are now completely euphoric with this not this casino mentality, this money grab mentality. And so all the heavy hitters are long gone out of these markets. It's just the people that were born into the pandemic with maybe not paying their rent and rolling it into, the stock or crypto market, or not paying their mortgage and doing the same exact thing. So in terms of, I know there's a lot of people out there that didn't pay the rent, but I think that was concentrated more to like those big cities like LA, San Francisco, New York. I think they got hit the hardest, but that is in fact the result of lockdowns and the pandemic. I was very fortunate. I didn't take mortgage forbearance on my properties. My tenants were paying rent. I considered it because I had the FOMO, the herd mentality. Everybody else was doing it. Maybe I should take mortgage forbearance and put a new roof on the place or roll it into the stock market. But I kind of had a moment of clarity, turned on my camera on YouTube, and this channel was born with these basic sound fundamentals that are going to help, hopefully, somebody just have, hear somebody say what they maybe have been thinking, but haven't heard somebody say it in a way that's resonated.
And that's how I found you. That's how I found you. Because when I do what you just said, basically is a clone of what I've been saying. And that's not why I reached out to you, because I really haven't heard that piece from you. But I was saying the same thing for the past year and a half. I'm like, guys, there's forbearances out there. People don't have to make a mortgage payment for up to 18 months, almost 2 years. People aren't paying student loan debt. You have rent for moratoriums. You have foreclosure moratoriums. Scott, I did a study. I posted this video about a month or two ago. In 2021, I was trying to prove some points. So you can always prove your point if you dig hard enough into data. But I just went to one thing. I'm like, why is spending just out of control? Okay, so I went to one of the government websites and looked at disposable income. And the disposable income chart goes like this, okay, through the government. In 2021, it went like this. People had more disposable income in 2021 than ever in history. Because I kept saying, nobody's working, but the stock market's hitting record highs every day. You have all the crypto money that's basically complete speculation pumping into that arena. And then you had home values just skyrocketing, plus sales, and everything was spiked. But you're like, okay, but the economy in the world is shut down. So how are we buying so much stuff, spending so much stuff, have so much income? And it's proven. Just go to one of the government websites or Google disposable income over history, and you'll see the spike. So it's amazing on a lot of how these dynamics are working out. And now everybody's like, well, inflation, the Fed completely missed it because this inflation thing is out of control. Well, you also had three dynamics that the government put into play that I just said that also saved people. Just think, if you didn't have a mortgage payment and a student loan payment and had to pay rent or anything, I'd have no bills if it was me. I have my daughter's student loan payments. I have a couple left on that, and I have a mortgage. If I didn't have those two, because I didn't do the forbearance, I'd have no bills. So thus, my disposable income would be out the roof. And now we're seeing the retrospect of all this where inflation is just going bonkers. I don't know what your opinion is. I'm still a transitory person a little bit on this. Yesterday, the JOLT index came out, which how many job openings there are, 11 million job openings. And then the report that came out this morning, 240,000 new jobs were created over the past month, and they were expecting like double that. So I still don't have the correlation between jobs and all the other stuff, because there's tons of job openings, but there's not being filled. And I don't know about you out in your, how's it out there? Is there like help wanted signs everywhere?
Well, there was, but not as much anymore. This is what I'm seeing personally. So in terms of the housing market is being cooled off right now by the federal government with interest rate hikes. Even outside of that, we kind of hit a tipping point where prices can't tolerate any more growth. So even before interest rate hikes, we did see a slight cooling, but we really are trying to cool down these markets because they overheated. The reason they overheated is because the amount of stimulus that was poured into the economy, it created the wealth effect for most of us Americans, where we had this little extra money. Had some pent up, we felt pent up. So we blew off a little steam when, things start opening up. And then a lot of people, just the wealth effect was created. People had appreciation in their homes. And so, that's basically, what we've done. We overstimulated the economy with putting too much money into circulation. The only way to calm it down is with these interest rate hikes. If we raise them too quick, we spook the markets and they collapse. So it's this delicate dance, right? We're on the razor's edge currently. So with that being said, that's pretty much how we got here. Now, what we're seeing currently, for me personally, if I take what's called internet leads from Realtor.com is my internet lead service. Zillow is the other big internet lead service for active agents who want to pay a fee to get those leads. What we saw was a massive phone just being dominated by internet leads, where it used to be a pretty small percentage pre-pandemic of the amount of call volume we get through, these websites pushing their people off onto us. And so then it went just bonkers. That's kind of when I came to YouTube. I was like, wow, this is insane. I've never seen anything like this. This can't keep going. That's died off. Houses now, if you look at what's the prices that are properties that are going off the market, are no longer going above appraised values at the levels in or around asking price versus over asking price. The amount of offers that homes are receiving, about 7, you're still getting multiple offers, but nothing like before. Not uncommon to see 20 offers all over asking price on one house. Insane. Right. Now what we're seeing is maybe 5 offers in or around asking price, depending on where they came on the market at, if they came on at a realistic number. Some areas are hotter than others. Days on market, we're seeing stuff, not going off market quite as quick. A clear shift is happening because of inflation, like you said, and interest rates rising. You can still buy smart today in this market if you know what you're doing, but be prepared to hold your real estate. That is the reality. Like I said before, cryptos and the stock market, a lot of money to be made. A lot of our viewers smart, understand how to make money there. But I think the wealth effect, the free money, the stay-at-home climate is changing. I'm seeing jobs now get filled. I'm seeing less for hire sign. People are being forced back to work. Why? Because inflation is causing them to have to go earn more money again. The writing is on the wall. We're going to return back to a more normalized markets, investment markets. That is coming, my friends. In my opinion, we're not going to be in this euphoric, overstimulated economy anymore. We're going back to pre-pandemic stuff. The way we get there now is yet to be seen, and what the blowback will be as we try to dance this delicate dance into back cooling these markets down without collapsing them, really.
That was the great point. The biggest context I got out of there is you're seeing on your side of the equation, things are starting to come back to normal. Not as many bids, not as many, I talked to an agent last Monday, they called in for something, And I said, have any luck this weekend? And she's like, no, we got outbid by $100,000 over ask. And I was like, that is nuts. So guys, I get it. We are not pumping this real estate bubble. We're just trying to educate and advise you guys on what can be done. And like Scott said, I'm trying to get realtors all over the country in different segments because they're all different. And Scott was kind enough to actually reply to my email. He called me. Great guy. If you're out in California, Southern California area, please look him up. Down in the description, I'll put a link to his website. I'll put a link to his YouTube channel as well. Please reach out to him. He's a great guy. He'd be more than happy to help you. If you need pre-approved or anything, reach out to us. But I just like having Scott on the channel so you can see who he is, how he acts, what he does, and what his thoughts are. Because here's my last question, and we'll leave it at this. I've already gotten 4 of these today. Do you think things will be a little bit more normalized by the end of 2022? Or do you think it's going to just keep, going bonkers? I think I know your answer, but if you could just close out with that.
No problem. So yeah, in final thoughts today, guys, first of all, if you want to buy or sell at the top of the market, I can help you no matter where you're at in the United States. So it doesn't have to be California. Anywhere in the US. Personally, you got to understand, you guys, we're in real estate. And so most people in this real estate space are going to cater to whatever they think you need to hear to make the sale. If you think it's a great time to sell, oh yeah, there's a crash coming. If you think you want to buy, oh yeah, probably no crash coming. Most agents rely on commissions, and most agents rely on commissions, so they benefit from this market continuing. So you got to understand, a lot of them are going to definitely tell you this is going to continue because they have to. It's normal. You can't fault them for that. It's their livelihood. They got to pay their bills. But the reality of now, it becomes the percentage of likelihood. Can it continue? Can a euphoric market continue when it's being cooled down by the government? I personally don't think it can. Now it becomes, is it a soft landing, a simple correction, a recession, or a full-blown depression? That is the million-dollar question that you'll have to ask yourself. In the meantime, I ask you to reach out to people like Dan or me that's not going to just give you rainbows and sunshine and let you understand both sides of the coin. You'll have to make up your mind ultimately. But hopefully, like Dan or me, we're here to earn your business now or even later. And that transparency is what hopefully is going to allow you to be able to trust somebody in the industry versus somebody who wants to just tell you, don't worry, plow into these markets, you can't lose. Because I don't think that would be fair to my clients, my viewers, or people that you work with as well. So to answer your question, Dan, I think by the end of 2022, we're going to see inventory hit the market. We'll start to see the inventory levels. Right now, we're about 50% of what a normal inventory level is in the US. I believe by the end of the year, we're going to see inventory come in with new construction, summertime listings, people that are just forced to market, and all the other ways that people might come to market. I think by the end of 22, we will not be having this conversation anymore. We will have more inventory, prices settling down, and hopefully not some big economic depression. I'm hoping for, a soft landing, but, I'm understanding any one of those could be produced. So stay tuned to the channel, stay tuned to Dan. We'll do our best to continue to give you updates, an honest, level-headed perspective of this one to the best of our ability.
And that's why I had you. So thank you so much, Scott, for taking the time out of your busy day to join us and just educate me and my viewers. And I hope to have you on many, many times going forward, that we can maybe look in retrospect to this video and say, wasn't so bad. So
absolutely.
Thank you again. I'll post all of Scott's information down below in the description. Please reach out to me. He's a great guy and he's always accessible. Every time I call you or you call me, it's like you're happy and you're willing and able to help anytime I ask. So thank you again. I greatly appreciate it. Thank you guys for watching. Please don't forget to give us a thumbs up, subscribe down below, hit the bell every time we post a video. You get an alert. Thanks, Scott. I'll talk to you soon, buddy. And I will see you guys later. Take care, and thank you so much. Bye-bye.